let's kickstart this edition of Buy Now Sell Now. Today on board we have Hemen Kapadia, Technical Associate at DRChoksey Finserv, who's joining us along with Shahina Mukadam, who is an independent analyst. So let's welcome both of them on board. And viewers, once again, take a look at the screen because this is a number that you can send us all your stock specific queries to. Remember to mention the name of the stock, your time horizon, if you have the buy price at which you've got the stock, if you need advice on the holding that exists, or if you want an advice on a stock that you are aiming to buy. Then give us the name of the stock and the time horizon, as well as the price that you expect to be buying the stock. I will be addressing all of these queries for you in a short while from now. But on that note, let's kickstart this edition and let's once again welcome on board Hemen and Shahina. And good morning to both of you. Hemen, let's start this edition with you, and I'm going to come to you with a query. We have a viewer who's not mentioned. Okay, yeah, his name is Bala. He's writing to us from Coimbatore, and the stock in question is SBI. Now, he says that he's already holding 100 shares at 800 rupees. So what would be the next move over here? Is now a good time to keep adding to this stock? Also, he's asked about Maharashtra Bank, and he's asking if now would be a right price to enter this stock for a time frame of 2 years. What's your view on both SBI and Bank of Maharashtra?
A very good morning to you, Sneh. Thank you for having me on the show. It's always a pleasure. I think since his horizon is 2 years, Sneh, I think it's a hold for both. You want to add? Yes, you can add some more. Both have walked into a correction of a greater degree. But yes, one need not buy everything at one go. You can buy some now and wait for some time. But yes, main question, hold. And yes, you can add both in small quantities, maybe something like an SIP, because I believe markets are going to be choppy this year. So yeah.
So that's the take coming in on SBI. Let me take this next query that I have, and this one is coming from our viewer. Just a second. Yes, this one is coming from Mohit. He's writing to us from Ludhiana. And Shahina, let me come to you. He has about 500 shares of sale, which he's purchased at a level of around 104 rupees per share. He wants to know what's the time horizon. His time horizon is 3 years. He wants your guidance on a sale. Good morning, Shahina. Good morning to you as well, Hemen. But what's your take on this one? Considering that this one also is a commodity-linked stock, a lot depends upon what exactly is happening when you talk about tariffs as well, when you talk about sale. So what's your take on this one? 104, very close to the buy price right now. That's where the stock is trading.
Yeah, I believe we should continue to hold it for even the medium to longer term. We are seeing steel prices actually bouncing up now again, with China having stated very clearly that they are going to support in a big way their reconstruction or their real estate sector. And I believe SAIL is well placed in the overall steel sector, especially since it's domestic also in terms of its market. So I would say continue to hold SAIL. You can hold it. If you're holding it for a 1 year period, hold it with a target of about 125. And you can hold it with a stop loss closer to about 90, which is a deep stop loss.
Okay, so that's the take coming in on sale. Let's move on to the next query, and we spoke about PSUs now. Let's speak about IndusInd Bank because that's the stock in question, Hemen. And this is Ignatius, a viewer writing to us from Kolkata. He has 20 stocks of IndusInd Bank at a buy price of 1,530 rupees per share. He's asking if now is a good time to average the stock at current levels. What's your view on this one?
A bounce is underway. It is going to take some time for IndusInd to recover. It's been a perennial underperformer. It peaked in 2018, and after that, Bank Nifty and many of the bank stocks, public, especially private, posted fresh all-time highs, and we are nowhere close to that. So if he's going to average, it's not a bad idea, but it doesn't look very exciting on the chart. So you can buy a small quantity and wait. I think he will have to trade a bit and exit at higher levels, buy it again. But yeah, at current levels, one, downside is limited. A short-term bottom has been made. Like I said, the bigger picture has gone for a toss.
All right, that is about IndusInd Bank. But let me come back to you, Hemen. This one is coming from Vignesh. He's writing to us from Bangalore. He has about 130 shares of Motilal Oswal, which he's purchased at levels of around 745 rupees per share. He wants to know whether he should go ahead and add some more of this counter in his portfolio. His time horizon is about 1 to 2 years. What's your take? Do you think Motilal Oswal, should he add at these levels, given the fact the sizable correction this one also has seen over the last 3 months very well, because given the fact that they are capital market players as well. So do you think he should look at Motilal Oswal only, or look at diversifying and looking at other players as well?
A very good one too, Cheryl. No, Motilal is not a bad idea. Like you said, is given a deep correction. Downside now appears limited. But simple logic, if the stock goes from, okay, this is adjusted for bonuses, but if the stock goes from 140 to 1060, it's going to take some time. You cannot run 2 marathons in a row. Having said that, downside appears limited. There's a slightly short-term view. A recovery is underway. There's support at around 600. We are going to see a bounce coming in. So yes, little bit of purchase won't hurt you. Yes, time frame has to be a bit on the longer side, but yeah, currently it seems as if the downward momentum is slowing down and we are on the cusp of a technical turnaround.
Okay, so that's the take on Motilal Oswal. Shahina, coming to you. Next query coming in from our viewer Siddharth, who's writing to us from Kolkata. He's asking about the outlook on PB Fintech and if now is the right price, right level to enter this stock. What's your outlook on PB Fintech as a stock?
Yeah, PB Fintech has seen a bit of a correction that we saw in the last couple of days. And from these levels also, I think slight bit more correction is likely. So if you want to add, of course, in the long term, I think it's one of the best platform stocks that you can hold for the very long term. But if I want to buy, I would prefer buying it closer to about 1,200 and then maybe hold it for the long term. And then long term, you can see a very good return. I would say if you're holding it for 3 years, you can see a target of closer to 2,200, 2,300.
All right, so that's the take coming in on PB Fintech. A lot of queries left to answer, but on this note, we will actually slip into a break. And when we come back, we'll continue taking your queries. Don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now. We're coming live to you from the ET Now Motilal Oswal studio. Let's continue taking all of the stock related query. We already have our experts with us. We have Hemen Kapadia to guide you on the technicals, while on the fundamentals, we have Shahina Mukadam to help you better understand the company's fundamentals. Let me continue taking the queries then, and this one is coming in from Shashi Kumar. And I would like to take a view from both of our experts, from you also, Shahina, as well as Hemen. No doubt it's a query asking about booking profits for this company, but this company and the stock has been hammered out of shape from its elevated levels. So the stock I'm going to ask you the query on is on Trent. This query is coming from Shashi Kumar. He has about 15 shares of Trent, which he's purchased at an average price of 2,904 rupees per share. Right now, what he's asking is, should he hold on to it or book profits? Hemen, no doubt it looks really good. He's making excellent profit. Must applaud even the viewer for staying put with Trent, despite this particular counter going slipping from these elevated levels of in excess of about 8,000 over the last 6 months to now about going sub 5,000 also as early as this week. What should he do? Book profits or actually stay put still?
Frankly speaking, Cheryl, you get the feeling of a roller coaster ride without actually riding one. But seriously speaking, deeply oversold, downside appears limited. It's fallen off a cliff from 8,350 to almost 4,900. Positive divergences, crossover buys are almost there. Few have already happened. So I would say hold as of now. He can sell on a bounce because the long-term picture, since we've had such a big move, I believe we could be entering a correction of a greater degree. But as of now, I think for the next few weeks, I wouldn't be surprised if we see a 1,000-point recovery, if not 1,200. So hold as of now.
Now is the call coming in from Hemen, and Hemen said that Shashi Kumar, maybe you must have felt like you are riding a roller coaster, given the fact that Trent prices have hit the top and now they have actually corrected significantly. Fundamental wise as well, Shahina, do you think that the top on the fundamentals is done? The roller coaster ride, when it goes right on the top curve is done for Trent, or do you think a lot more is left for this particular company to uncover? Because of the last 1 to 2 years, it's done spectacularly well when you talk about the business and the fundamentals of the way how Trent has been progressing. So based on that, what should our viewers do?
See, I would agree that it's a hold. Basically, valuations are expensive despite the stock having corrected. So I would see a bit of consolidation going on. But if you see revenue growth in the last quarter, revenue growth by more than 35%, profit growth by more than 35%. So it will be just a matter of time, a couple of quarters before we start seeing good buying coming in. So for a long-term investor, it is better to remain invested in Trent.
Okay, so that's the dual view coming in on Trent. Thanks so much for that. Let's move on to the next query. Hemen, coming to you. Ramesh from Coimbatore is writing to us. He holds 1,000 shares of IIFL Finance at 409.5 rupees per share. And given where the stock price is right now, it seems like he's sitting on a significant loss. So what's your opinion on this? He's asking if he should hold for a long time or book his loss and exit now.
Painful looking charts, nahi. But yeah, having said that, I believe one should hold. We've had okay, most of the mid caps and small caps have done the same thing. We've entered a deep correction, but now we are getting into a congestion area. There's very strong support, and yeah, base formation should be happening soon. So hold if you've got a slightly longer term point of view. If you have a slightly shorter term, maybe 6 months or maybe 1 year, then it would be a sell on bounce. But if it's 2 years or more, I believe it would be a hold.
All right, so that's the take coming on IIFL Finance. Let me come to you for the next query. This one's coming from Dean Sequeira. He's writing to us from Goa. Shahina, he wants to know about Tata Motors. If it's okay to go ahead and buy right now for a time span of 1 to 2 years. Today, you have a very good note coming in from CLSA where they've upgraded the stock to a high conviction outperform from an outperform rating, a target that is set in excess of around 900 rupees per share. Tata Motors, just like the way how the rest of the market has seen a correction, has seen a sizable correction from about 1,000 rupees odd levels. Now it is actually sub 700. What's your take based on fundamentals for the next 1 to 2 years? Time to actually dip into Tata Motors?
If you have a long-term perspective, yes, you can start dipping in because the balance sheet quality is improving, but the competition is becoming extremely aggressive. So you only buy as of now if you have a long-term perspective. I would see the stock continue to consolidate at lower levels for some more time because China is becoming a big competition even in the EV space. And we really don't know with the tariffs and new competition that is coming in from Tesla also how things will work out. So it's better to buy if you have a long-term perspective or wait for a couple of quarters and then buy.
That's the take on Tata Motors. But Shahina, once again coming to you because the next query is also a fundamental view requested on Whirlpool. Shyam Agarwal from Haryana is writing to us and wants your view on Whirlpool. Also, given the recent news of the stake sale by the parent coming in, that is something that the stock has seen right now. Some volatility on the back of that. But what's the outlook going ahead fundamentally? How does this company seem to you?
I would avoid Whirlpool as of now. There is a lot changing. There's changes that are happening on the ownership, and I think even in terms of valuations, it is expensive. So I would avoid it as of now.
Right, avoid coming in for a Whirlpool. Let me take this next one coming from Kumar. It's on GMDC. Hemen, he wants to know about GMDC, about 10,000 shares that he's purchased of this counter at a price of around 350 rupees per share. He's been holding on for more than 6 months. He wants to know, should he still stay put with it?
There's no shortcut solution to this, Cheryl. His holding needs to be 2 years. Otherwise, it's a sell on bounce. Once again, 250 support, a, a short-term oversold situation is improving. Long-term picture seems to suggest that we've taken a hit, technically speaking. So 2 year holding, 2 year investment horizon is a hold. Anything lesser than that, you have a sell on bounce because it's going to take time to recover.
Okay, so that's the take on GMDC. On that note, viewers, we'll slip into a very short break on this edition of Buy Now, Sell Now and keep addressing all your queries on the other side. So you keep writing to us and we'll be right back. Welcome back to Buy Now, Sell Now, a show where we're addressing all your viewer stock-specific queries. So keep writing to us. But in the meantime, let's address the queries that we've got in so far. And Shahina, coming to you, this query is coming in from a viewer, Jayesh from Mumbai. He's asking about Crisil because he has purchased 200 shares of Crisil at 5,000 rupees. He wishes to hold this for the long term. He's asking if now is a good idea to add to his holding and buy more at the current price. What's your take?
It's a good stock to hold. I think the business opportunity is good and they are doing pretty well. But if you are buying it I would prefer, given the volatile market, to buy it closer to about 4,500 levels. And then over a period of time, you can see something like closer to 6,000 also, if you're holding it for a period of 2 to 3 years.
Right, so that's the take coming in on Crisil. Let's talk about Voltas then. And Gotham from Mumbai wants to know what's the good price to go ahead and buy Voltas, Hemen, given the fact the stock has seen a sizable correction?
Depending, Cheryl, on his time frame, if it's a slightly shorter term time frame, he can buy it right now. If it's a medium term time frame, then he needs to wait a bit because the technical setup has taken a hit, and for everything to recover and stabilize is going to take time. But yeah, the market is set for a rebound. So shorter term view, I think current levels are not a bad option to buy. Cheryl.
Not a bad option to buy. Is the call coming in on Voltas from Hemen. Shahina, coming back to you. Interesting query. Our viewer Mohan is writing to us. He holds 500 shares of Vedanta. He's saying that now that the demerger is underway, and just today we've been hearing that a big chunk of the company's creditors are in favor of the demerger happening. He's asking, would it be a good idea to increase his holding by another 1,000 shares in effect of this demerger, or should he just wait and continue to hold what he already has?
He should hold what he has. He can also add, I would say, given that the demerger is very much on the cards over in the next 6 months, and aluminium business is likely to do pretty well for them, given the fact that aluminium prices are moving up. So the overall potential for getting a good price in terms of even post split, I think Vedanta with a 460 target, one can even add position.
All right, this next one is coming from Bharti Dave, who's writing to us from Gandhinagar. Is a long-term investor, has Raymond and Tata Tech, a good now chunk of that in the portfolio, and facing a huge loss. Wants to know what to do with both of these counters, average or exit at this stage. What's your take coming in on this one, Hemen? What should our viewer do? Raymond and Tata Tech, both of these counters in the portfolio, and both of them, he's suffering a loss on this.
Raymond is deeply oversold. There's strong support at 1350. One gets the feeling that the downside does appear limited. It's taken support earlier, and we've taken the support after a few months once again. So this is turning out to be a decent level. So hold as of now. A bounce is underway. I'm sorry, I don't track Tata Tech.
Views on Tata Tech by any chance, Shahina, given the fact that, yes, I believe I'm also apologies for that, Hemen, because it has also a very limited chart history for you to actually talk about Tata Tech. What's your take on this one? Tata Tech, our viewer is suffering a loss on this one, holding a sizable amount. If you could give a take on Raymond as well.
I would say Tata Tech would be a switch from current levels. Some of the larger IT stocks like TCS or Infosys look better at current levels. It's very expensive. I'm not, of course, the management is great and the long-term potential is there, but as of now, I would believe that, in terms of valuation and potential for the medium term, these larger Infosys would be better. Raymond, I would agree, they have corrected, and from these levels, I think the potential is good. Textiles, India is going to be China plus one. So I think there we have good potential for garments. Domestic also, they're doing well in store capacity addition. So I would say hold.
Hold coming in on Tata Tech. But Hemen, coming to you for our next query, Sunita Rai from Bangalore is writing to us, and she's holding Central Bank at 41 for a long term. She's asking if she should exit this and invest all of that in Canara Bank instead. What's your view? Hemen?
That was for me?
Yes, Hemen.
Yeah. Okay. I think Can Bank is stronger, followed by Bank of Baroda. But holding on to Central Bank is not a bad idea also. But just for sheer technical strength, I think switching to Can Bank is a good idea. It is one of the better looking. The retracement has been comparatively less as far as Can Bank is concerned. Yeah. So shift can be considered.
Right. Coming back to you, Shahina, this one is coming from Indira, writing to us from Chennai, wants to know about ABB, if she can buy it at this price. What's your take about ABB India? We did see that sort of a reversal from the day's high yesterday for this counter on back of this cautious commentary coming in from the management. But if you look at it, ABB India, I don't think this one has seen that much of a correction over the last few months. I may be wrong on that particular front, but what's your take coming in on ABB India? Do you think this is a good price to buy?
Well, there has been a correction, but despite the correction, it is still very expensive. And even if you want to give a very liberal valuation to a multinational, at the same time, I think potential for the longer term is good. The power sector is doing well; they are in good segments. But if I want to buy, I will not buy it now. I will buy it at much lower levels. I would prefer something closer to about 4,500, maybe even closer to 4,000. But I won't buy it now. And if you're a long-term investor and you're holding it, no harm. You continue holding it. I think the long-term potential remains good. We're going to see a period of consolidation for a couple of months.
Okay, so that's the view coming in on ABB India. Let's move on to the next query. And our viewer Dinesh is writing to us. And Hemen, his question is on Adani Green. He holds 500 shares of Adani Green at a buy price of 1100 rupees. He's asking if he should continue to hold or time to average it out. What's the view here?
Currently, I'd wait before averaging because if you look at the past some time, it hasn't exactly performed well. We are closer to 800. So if he wants to average, I think, okay, we are at 866. He can average at 800. Otherwise, I believe a close above 1050 would be in the first technical green shoot in some time. Maybe that is the time to add. Currently, we are frankly speaking in a no trade zone. Too late to sell, too early to buy sort of a scenario.
All right, this one is coming in from Vijay then, and he wants to know about Coal India for a fresh investment for a long-term perspective, Shahina, and he's very clear. He's saying he's looking at Coal India purely from a dividend perspective investment. Do you think he should do that? Go ahead for Coal India for a dividend-based based sort of an investment, or should he look at some other growth stocks right now?
From dividend yield perspective, yes, Coal India is one of the best available. Dividend yield is as high as something like a 7%. So yes, if you're looking at dividends, that's a good stock to be in. Having said that, I believe if you're looking at it for the valuations, coal prices are pretty low, have come down, and the numbers if you saw in the last quarter were pretty disappointing. So if you're not really going to bother about the performance and focus on dividend yield, I think it is a good hold. But if you're looking at fundamental in terms of earnings, I think it's going to be disappointing over the next quarter also. So I would say hold, given his perspective.
Okay, so that's the take coming in on Coal India. Hold but be cautious going ahead, but good on the dividend point of view. Hemen, next query coming in from our viewer Dilip, who's writing to us from Orissa, and he's asking that he has 30 shares of Cummins at an average price of 3,225 rupees per share. He can continue to wait for 1 year, but according to you, is it a good time to average this holding right now or completely opt out? Having said that, he is okay to hold the stock for 1 year. So what's your view going ahead?
One request, he specified 1 year, but if he can make his time frame 2 years, I think I would have more conviction. Beautiful move from 300 to 4,150 odd. We walked into a correction of a greater degree. Maybe this is for majority of the stocks we've spoken today, for most of the market snake. So I would say hold as of now, extend that time horizon. If you don't want to extend the time horizon, I believe a market bounce should take it to 3,100 or 3,300. Maybe that's the time to exit. Hold for 2 years or more.
All right, so that's the take coming in on Cummins India. Just a request coming from Hemen. Increase your time horizon on that particular counter. But on that note, thank you so much, Hemen, as well as Shahina, for joining us in the show, taking all of our viewer-related queries. And viewers, remember that today is Women's Wednesday, which means once we slip into the break and we come back, you'll have an interesting conversation talking about how one can make wealth, especially for all of our women investors. So don't go anywhere.